This computer. So hi everyone, this is Sandy from eXp Realty. I am your Hawaii real estate agent, and I have a terrific guest with me today. Here is 𝗦𝗢𝗙𝗕𝗦𝗖𝗥𝗜𝗕𝗘 of USA Mortgage. He is the retail branch manager here in Honolulu, Hawaii. So he has a great new program with us today. Hi, Chad.
Hey, Sandy, thanks for having me today.
Of course. I'm so excited to hear about this new program that you have for us, right?
Yeah. So basically, this is a down payment assistance program. It's for conventional loans. Basically, it's a second interest-only mortgage for your borrowers that covers up to 4%. So if you get a conventional loan at 3% down, you get an extra 1% to help you cover closing costs.
Wow, that's amazing. So what are the rates right now, just off the top of our heads? What are we looking at here?
Yeah, so rates are in a scary area, as I'm sure we all
Yeah,
know. We're somewhere, if you're if we assume the same things that banks typically assume, 20% down, single family home, all that kind of stuff, good credit, you're probably looking at, somewhere in the low sixes at a couple of points, higher if you're not going to pay any points, of course.
sure. So how does this loan work though? Since you did mention that, we are looking at 6% interest rates. So if somebody went in, let's say maybe they had maybe 10% to put down on a $600,000 home, how would that go about? Like, are they going to get that full down payment assistance or?
Yeah. So if they do come in with down payment, they can get that extra down payment assistance to cover their closing costs. Now they can't go more than that,
Okay.
right? So costs are, let's say, 2% of the loan amount. They can't go 3%. They can't get cash out of that transaction. Yeah.
Okay, that sounds really good. So let's see, who can apply for this? Is there any restrictions on income or credit scores or anything like that?
Yeah. So first off, normally you see programs like this. It's for first-time home buyers. This one's for anybody that wants to buy a primary residence.
Oh, wow.
The minimum FICO is 660, so we need at least 660 credit scores. Not bad. A lot of people will fall into that bucket. As far as income limits, the income is actually pretty generous. So most programs follow something called AMI, or area median income. So that's going to vary by county to county. But for Honolulu, the area median income is $113,300. And so for this, we can actually go up to 140% income. So that's about 158,000. So again, a lot of people fall into that bucket as well.
Yeah, that sounds really good. I'm sorry.
Yeah. Oh, no problem. And so now with the conventional loan limits going up to over $1 million, right? 1.076 million for a one unit single family home, the buyers will be able to take advantage of this with the higher loan amounts for sure.
Wow, that's really good. That's excellent though. Yeah, like I said, things are kind of getting tough, right, for buyers right now.
It is, but there's some good news. I mean, we know that the rates will correct, right? We know that it'll come back down. And the theory, of course, take this with a grain of salt, but the theory is that the higher the rates go, the bigger the swing will be when it comes back down. So, I don't think we'll see 2% loans again, but it could be a pretty big swing, and that's what we're hoping for, that it'll get down to a lot more manageable.
Yeah, that sounds great. Yeah. So you did mention this is relatively a new program at your office, correct? You just
Correct. Yeah, so we are in most of the states on the mainland. We're in every state except New York and Wyoming, and so this program does qualify for. There's about 5 states that don't qualify for this program, but Hawaii is one that does qualify for this program, so we can do that here. Yeah.
That's great. That's great. Yeah. So let's see. You did mention that you don't have to be a first-time home buyer, which is good. But like you said, this is only for primary residence. This is not for a second home or investment property or anything like that.
Right. Yes.
Sounds good. This is a little bit off the topic, but I did want to ask you about Any advice that you can give buyers right now? We are running into a lot of people where they are complaining about the higher rates. The prices are still pretty high. They are coming down. But as a loan officer, what is the best advice that you can give buyers right now to put them at ease?
Yeah. So, I'm sure everybody's hearing, love the home date, marry the home, date the rate, and all that kind of stuff. But really, it goes beyond that. There is actually a cost to waiting. Yeah. And so one of my loan officers actually was doing this, and wow, this is a really good idea. So basically, what it is, we know that over time properties appreciate, right? Um, we're seeing insane appreciation over the past couple of years, but in a normal market, 2 to 3% or so per year. So with that, I actually have a spreadsheet that I can work with clients on this. But as we wait for rates to come down, it's going to take time for them to come down. And in the meantime, property values are going to go up. Right. So roughly, even if we only see 2.5% property appreciation, that's going to equate to somewhere between 1% and 1.5% on a rate. So, if you wait too long, yes, rates will come down, but what are property values going to do in the meantime? And it's going to be if you wait too long. So, I would definitely recommend buying now. Rates will eventually swing, and you can always refinance at that point. But it's more important to get in when you can, knowing what your payment is and knowing that you can handle it in the short term until you can refinance and get a better payment. Yeah.
That's a really good point. Yeah, thanks for saying that. One more question is, what is your opinion about a lot of people are saying, just like you mentioned, refinancing later, maybe getting into an ARM first, which is offering a little bit lower rate right now, and then maybe refinancing. What is your take on that?
Yeah. So, yeah, our pricing is not, I mean, it is a little bit lower, but it's not as great as it normally would be. What you might suggest, not all lenders can do this, but some can. We're one that can. You can actually do something called a temporary buyout,
Okay.
where you are paying a little bit extra at closing, but you're getting about 2% lower for the first year, 1% lower for the second year, and finally by the third year, you're at whatever your rate is. So let's say you get in at 7% today, right? So your first year mortgage will be at 5%.
Okay.
Second year will be at 2%, and then the third year will be at 7%. Now, like I said, there is a cost to this. So basically, you're paying the interest difference up front, but at least it gives you that, more comfortable payment. You can go with less points, right, to cover that difference. But at least you got that lower payment in the meantime.
That's true.
And then you a little bit of buffer before you decide to refinance. But that is a good option for some people, and it does give you a better start rate than an ARM.
Sounds good. Yeah, sounds like you guys have a lot of options out there for buyers. So I guess the best thing is to maybe contact you, and the individual should talk to them about their situation, and you can come up with the best plan for them, because not everyone's the same, right?
Absolutely, yeah. What I find is a lot of times buyers will come in with a specific idea about how they want to go about it. But once I look at their whole picture, I can come up with several different alternatives, and a lot of times, I like that idea better. So yeah, definitely you want to meet up with the loan officer and show them your numbers and see what they can come up with. We all have a lot of arrows in our we can use our clients for sure.
Yeah. Well, yeah, thanks. Thank you for that. Because like I said, there are so many options right now that you guys are providing that people really don't know about. And it's really unfortunate that, the word doesn't get out there, because it's not all that bad. And I keep telling them, and sometimes they don't believe me, but when someone in your position says, hey, we can really work something out, that really makes a difference.
Yeah, the best advice I have for buyers is not so much to look at the rate and the prices. They're scary if you look at it that way, but look at the monthly payment, right? If you can afford the monthly payment, really it doesn't matter what the rate or the price is, right? If it matches what you're paying in rent, why not? Right? Then it makes it way less scary when you look at it from that perspective.
That's true. That's true. Yeah. Great point. Thank you. And thank you again for Chad for being here. I'm going to put your contact information right above your photo. So what is the best way to contact you? Is it email? Is it phone call? Is it text?
Usually, I mean, I'll respond to all three for sure, but email will usually get the fastest response.
Sounds good. Okay. Well, keep us updated on any other great programs out there. There are tons. So like I said, please contact Chad if you have any questions about any programs or just in general about getting a loan for a home. So thank you, Chad, for your time, and I appreciate it.
Thank you, Sandy.
Okay, keep us posted.
I will.
Thank you.
Bye.